favorite friends, this is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show that we do every evening. We basically look at the technical charts and then try to understand what happened in the market during the day and then plan for a better trade for the upcoming day that's starting from tomorrow, Feb 9, Friday 2024. So we had a bear attack. Big fall, sharp falls of 1,300 points from the top on Banknifty and more than 350 points on the top on the Nifty. Sharp fall trending down more, and that was following in the Reserve Bank monetary policy outcome that came today in the morning at 10 o'clock. Right. It was expected to be volatile, but the expectation was that the policy would be the continuation of what it was, not change, but it was neither hawkish nor dovish. So the market took it slightly negative, and that's what happened today. So this is a wrap up. We may not have the charts properly because there are some issues in investing.com. I have screenshots here. Switch to this in case we face problems. So this is a wrap up of what has happened, except for the Fyers data that is not coming yet. So we'll see if we can manage to analyze using the charts. So this is the Nifty chart basically. So we can clearly see that there is a consolidation zone, and look at this candle. It's wide range bearish candle. That's a 350 point fall from the top. It's a consolidation. It's a double top. It resisted 2, 3, 4, and the 5th time it failed. 5 times settled to break out of the zone. Almost. So there is some condition that's there at the 22,000 nearby zones, and that's exactly what has pulled down. And there is every potential that it can go down towards the bottom once again. Remember, we had a 4.5% of retracement for this vertical move of 31%, and once again we are unable to break out that easy. It may take some more time, but interestingly the 20 exponential moving average is still intact for the Nifty. That's a positive thing. It did bounce up slightly from there, right? So we had been consolidating in this box, and it tried to break out and made all-time highs just 3-4 days before, and it felt the resistance heat and then came back to that box, and now there is a larger consolidation zone of probably 1,000 points that we have on the Nifty, but a wide range bearish candle, but managed to close above the 20 exponential moving average. So you see that Banknifty had a even sharper fall here. This fall is actually 1,300 from the top, and look where exactly it faced the resistance. We have been talking about this 20 exponential moving average and 50 exponential moving average zone, and exactly at the 50 exponential moving average it felt the resistance and then fall sharp 1,300 points nearby from the top. Very sharp fall, wide range bearish candle. Remember, we had Banknifty which had fallen sharply. The correction was more deeper of 8.5% as against 4.5% on the Nifty, and it attempted to move up and break out of that 50 exponential moving average. It did do that, but it could not sustain and come out of that zone of about near 247, 200 and 44, 500. That's such a wide zone. It couldn't close above that, so it fell since the last 4 days, and the 5th day it finally cranked down following an outcome of an RBI event, and it lost the 100 exponential moving average also. So it is now only the 200 exponential moving average now. So it basically may be testing this, the 44,458 zone, which is slightly below the 44,678 200 exponential moving average. It may retest that Any breach of this 44,400 maybe not that great. I may have some support at 44,000 nearby with a gap and the rounding number, but yeah, a breach of the 200 exponential moving average is not that great. So that's where we are. So we had this blue color channel which we had conquered, but now it has fallen down from that back to the yellow color channel, and probably it may be heading towards retesting of that swing low, or a breach of that could be retesting the channel low, right? So not a great situation for the Banknifty. Nifty is dragging the Nifty down. It had been weaker, it had deeper correction, it was facing much resistance, and we had the budget volatility, we had the Fed interest outcome hawkish volatility, and then we have the RBI policy negative outcome reaction also. So a lot of events had got registered in the middle of earnings and all that. Now if you study the resistance, the first resistance will be 22,000, and then all-time high of 22,126.7, and above that it can go as high as 22,400 zones. All the rounding numbers in between can be resistances because it's already outside of the Fibonacci extension of 78 also. So downside, the first support could come in at 21,700 nearby zone, which has got a 20 exponential moving average, 676 or something. And if that is breached, we have 23.6 Fibonacci retracement level and 50 exponential moving average that's coming at 21,300 nearby zones, right? 300, 350 that zones, 21, 300, 350 that zones would be the good support if that is breached. And if that is also breached, the swing low at 21,140 can be support. And if that support is breached, we have a gap that comes in at 21,000 rounding number and 21,950 that area. After that, 100 exponential moving average will come at play at 27. That's the support resistances on the Nifty. Banknifty, the first resistance will be again to take over the 20 exponential moving average and the 50 exponential moving average, which is coming at 46,150, 46,000. That's also conquering 46,000 will be crucial. For 46,150 also is crucial. So after that, the Fibonacci retracement level 23.6 comes at 47,100. That's also 47,000 is a big rounding number also. It's all resistance on the upside. Downside, the first support could have met 200 exponential moving average, 44,700 nearby zones. That is breached. Your swing low is coming at 44,400 nearby. That is breached. We have 44,000 rounding number, and the gap is there at 43,960. That's resistance support on the swing bank. We'll just get back to the quick market wrap up. So that's almost 1% wiped out, 212 close to close basis on the Nifty, sharp fall following the RBI event and wide range bearish scan. Even sharper, nearly 1.76 points, 800 points wiped out Banknifty, and still it managed to close above the 45,000. Banknifty managed to close above the 21,700, but Banknifty has not got the support of 2050 and it has lost the 100 exponential moving average also. It got a price action was a gap at morning, but after the evening it was volatile and then it was trending down all the day. So Fyers was sellers by ML yesterday, so 1,691 in cash market, and 3 days they were FNOs were there bearish for institutions, and they had been selling heavily except few days of buying that is coming. But otherwise they had sold 45,000 crores or something in cash. Players were contributing a little bit, but mainly buying. It's a mutual funds mainly. So today's dollar is not coming. We'll quickly check if it has come in between. But definitely Fyers might have sold heavily, that's for sure, no doubt about it. Otherwise market cannot fall that sharply. If you resistance and support levels, we have already seen that. I'm not repeating it. Momentum has fallen into the bear zones in the Banknifty. Nifty somehow managed the sideways momentum. And the trend also, Banknifty has crossed to the bearish zones and Nifty managed the bull zones. But it is weak falling strength that they both have. India which is spiking up and it's out of the low volatility regime now. It's close to 16, 15.82. It's a 2% up only, but still it's steadily moving up and you have to be cautious about it. So there is some fear in the market that's causing this, and as it reaches towards the 20-year, either cut short your positions, either stay out of the trades, especially if you're in derivatives. Apology bands are sideways now, both indices indicating sideways movement ahead. One of them has got a bullish bias, so that's Nifty. Banknifty has got a bearish bias. So Banknifty is not sideways anymore. It was expanding on downside yesterday itself, and today it's confirmed. So Banknifty has got sideways expansion on the Bollinger Bands, indicates more down moves, but Nifty is sideways. Marrying in the sideways, it was bullish yesterday, now it is sideways, and that means consolidation may be there expected as well. The Bollinger stands steady. Right? So again, there is a divergence that has come back between Nifty and Banknifty, but not bull bears divergence, but sideways to bears divergence between Nifty and the Banknifty. Taking a chance of consolidating violently, moving within next range, lost the momentum, gains the momentum next day, then again lose. So it's between the bands that's moving. And now it is falling sideways, maintaining the bullish trend as per the ADX indicator on Nifty, but bearish trend is what we have on the Bank Nifty. Remember the correction is 4.5 to 8.5% respectively on the indices. We had a big breakout move in the January month, and after that, December month primarily. So we were talking about double top for the end pattern yesterday. Its potential in there fall. We talked about that, and it did happen today. Nifty had attempted to move up, it's facing conditions at 22,000 nearby zones. So this is not correct. The rest of this data I'll have to go directly and check out that. So we have the IT, which is green, and that's the only sector that is green. Metal index, auto index, pharma index, all FMCG index, and all of them have fallen substantially, but pharma has only flattish close. Right, so we have bullish momentum in the IT, metal, right, auto, pharma, and FMCG is the only sector that was not having a bullish momentum on the sectors. Even now, FMCG is the only sector that is not having a bullish momentum. It's because of ITC primarily. It fall 4.5% or more today. Very sharpish fall is what happened. So across sector except for the ITC, because of the inflation or the RBI policy accumulated, FMCG is correcting drastically in this fall bearish on for the short term, but other sectors are all intact in the bull zones. If you see the major sectoral indices, it is a green closing, TCS and Reliance alone. Trust is all red and deep red on Bank Nifty and Kodak Bank and ITC 4% lost. Right, ITC, Kodak Bank, ICICI Bank and HDFC Bank is where the sell-off happened today. So HDFC Bank is in the bear zones, ITC is also in the bear zones. First, Reliance was in the bull zones, it maintains that. ICICI Bank sideways, Infi was in the bull zones, maintaining that. TCS was in the bull zones. So IT stocks and Reliance somehow maintains the bull zones. This now fall into sideways, and ITC and HDFC is in the bear zones, which is not that great. So we still have more or less the same pattern that we are seeing with respect to the selling and the bullishness and the bearishness and the sideways movements on the major heavyweight stocks contribute to the entire. So more or less thing. US markets are showing some green, right? Showing some green. It's an all-time high levels, and it's breaking out. It's in a bit of a rally, so even the Nasdaq and the S&P 500 also showing green, so that's good. And if you look at the currency, the USD INR, it's weak, very close to the 83, always managed by the RBI. Hope it remains to be weak. USD INR flat is close. Now the dollar index is spiking up, rising, but rupee remains to be weak. And oil is actually spiking up at the bottom. Right? So it had a deep correction. It's in a parallel channel, long way to go. So anything above the 90, 88 kind of levels would be trouble for us. Gold is consolidating at the top. After making an all-time high, it is consolidating, not ready to fall down. Momentum is kind of sideways, not bearish. So that's what it is all about, right? Commodities, global cues not poor. So only the RBI outcome that has created the problems, but overall more or less the same scenarios across the sector and heavyweights. But the thing is, Nifty has fallen back to where it was with the bear zones. It's getting towards the retesting of the 200 expansion moving average once again. Nifty gave up all the gains, so back to square one. That's what we are. Maybe a dip like this that happens is an opportunity for you to buy in good quality stock for long term in the small chunks or as IB mode. For traders, you know what it is. It's sideways momentum as of now. If you look at both the indices in the short term, but Nifty, it has fallen slightly into the bear zones. So we'll have to check if that goes deeper or it remains. So it will, or would it come back to the climb back on the side into sideways or not, just like it did few weeks back. So to keep a close watch. If it does not, then Nifty. So, but both indices has to come into the bear zones. Only then we can have a directional strategy. Right now, the Nifty is set to join. Nifty is fallen sharply. We have to keep a close watch if it follows the Banknifty and falls in the bear zones or not. But long way to go. There's a huge difference there. So probably 200 day maybe give Banknifty support and then some consolidation would probably happen. Tomorrow is a Friday, weekend, weekly candles get formed. Probably tomorrow is the day for taking positions in Nifty or even Banknifty because you get a little bit premium ahead of the 3-4 days gaps before the next expiring on 15th, 14th and all that, right? So take Friday, after Friday you don't have any premiums to play it. So Friday is the time I would go for weekly option strategy. So overall, tomorrow is going to be crucial. Very crucial. Today was a reaction to an event. Tomorrow will be a confirmation of the reaction. Right? If there is no confirmation, we still have a hope. But bears had a big attack following the RBI outcome, and we had a sharp fall, very sharp fall outcome, more than what was expected. Right? Volatile sharp moves, and have to be careful. If we give up the gains, Banknifty retesting from where it had, trying to climb up from the retracement. Right? So that's all I have. If you're watching this and not subscribe, please subscribe and share to friends and colleagues so that reaches out to more. Put in the comments, feedback, helps a lot, and share to your friends so that reaches out to everyone. Play it safe. VIX is rising up. Be cautious about that and protect your capital. Have hedges when you're carrying forward the positions and tight stop losses, and cut short positions VIX is further spiking up. That's all I have. So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.